Hello folks, I'm Ellie Little, and this is your daily TA wrap, where we take a look at these markets from a neoclassical perspective and ask ourselves what happened today and what does it tell us about tomorrow. I do the show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here on the base of what is about to be a snowy Rocky Mountains. Folks, last night the read was long. The read was that we were going to try to bounce, that we were going to try to work higher. The read was totally wrong. That's not what happened. It didn't, we got higher in the first 5 minutes and that was it. There's a sell-off from there. And when that happens, it always tells you 2 things. One is you're not reading it right. And the volatility's there, something's there, right? Whatever it is, it's not doing what you expected. And when it's not doing what you expected, you got to pull back. You got to get a little more conservative in what you're doing. And you just got to lay off the short-term reads in terms of, how much weight you give them until the market sorts itself back out or until you get back in sync with it. The second part of that is when you do that, you always have to fall back to what is the long term, right? And what's happening on the long term. And if we look at the long term, and you can always do that here on TA Today, you can just pop down in here and go to the current market trends. As long as you're logged in, you can see them. And you can see what the trends are. I mean, they're all bullish, right? For the most part. So if your long-term trends are bullish, intermediate and long, and actually even have that on the shorts on most cases, then that's the way you have to lean. You don't change the way you structure, the way you're positioned with respect to the market, because you can't time each and every turn. You can time some of them, and we do a pretty good job of doing that, but sometimes you're just wrong. And I definitely was wrong last night. And when that happens, I back up and I look at what's happening and I try to get back in sync with what the market's really doing, what it's telling me. And it can be the case that the market's just not in sync with itself. It could be the case that I'm just reading it wrong. Either way, I don't want to put a lot of money at risk when I'm not in sync, because that's the way you lose money. So you fall back, you look at your longer term stuff, you stay in sync with the longer term stuff. And it's kind of interesting here that Feedy asked before I came on, good evening, he says, LA, do you think it might be better idea to trade the weekly chart, because I wake up at 5:40 a.m., do my research 7:30 a.m., then I have college until 3, and I can't find a good entry on the daily. So, yeah, I mean, matter of fact, trading weekly is not a bad idea, and that's what I mean when I say fall back, right? You have to fall back, and you have to start looking at your weekly charts in terms of any kind of positioning, because what's going to happen now when you get this kind of volatility and when the reads aren't as clean as you want them to be is you're going to get stopped out of stuff. And if we take a look, and we'll pop in here and look at the ending numbers in a second, but if we take a look, let me grab the general markets page and pop up a chart. If we take a look at the chart, right, and we pull this in, you can see you're getting some fairly wide bars that are starting to take place, right? And if you're using, for example, the September 30th bar, the low, as your stop, right, just below it or something, you got stopped out today. And then the market goes right back up. Well, it didn't go all the way back up, but it got to bounce back up, right? So you actually would have been better just to hang on, so to speak, right? The volatility, when it increases, you have to either get out of those positions that you're in that are short term, or you have to just work your long-term positions. Those of you who are not members, of course, can't see the portfolio that I trade and that I make available to all the members. That portfolio has one short-term trade in it. We had a few more about 2-3 weeks ago, and we got rid of them all because we expected the market to work sideways to up at best and have more volatility, and there was no reason to hold on to short-term trades. One trade we had at the time was was the XLV. We bought it on the breakout down here. We wrote it up. We sold some of it, and then we sold some on the retrace. At this point, looks like a great idea that we had. We took our money and got out of the way. I still like this sector, but right now it's just hard to play this sector. It's hard to play anything on a short term. If I pull it over though and I look at the weekly, it's a different picture. The weekly, there's certainly different areas. For example, the support zone's back in here. So, it might be best just to be patient and wait to see if it wants to come back in deeper, and then you use that weekly as your entry levels. The problem right now is that most of your weekly charts are not going to show any kind of entry levels other than a few that are breaking out. And so, essentially what it's going to tell you is that you really just want to stay in what you're in, maybe protect it on a short-term basis, and for the most part, you wait for a better opportunity. And that's where we are right now. So let's take a look at the ending numbers, and then let's try to make sense of what the market is or isn't telling us. The industrial's down 136, just under 15,000, 14,996.5. The S&P's down 15 and a quarter, 1678.5 at the close. Composite down 40.5, 37.74 and a third. The NDX lost 39.5. Excuse me. 32.13, almost 32.14 was the close. The Russell actually ended up not being the largest loser. It was early, got a bounce. 1070.90 was the close. 1071, it was down 11.5. Gold gave back the majority, not the majority, but a big piece of the gains it had yesterday. I don't remember exactly what I said about it, but I'm pretty sure I was talking about not trusting that move higher. Silver also was down. Pretty much we were down across the commodities for the most part. Dollar couldn't get going again. None of the dribble lower. Dollar's threatening all of its lows right now. And the bonds, I think the bonds were weaker today too as a result, or maybe slightly higher to begin with. So anyway, the point is that you're not getting any kind of performance in the equities themselves. They're pulling back. And in this kind of environment, and when you don't get a read right, then you got to back off. You got to reassess, and you got to go off the longer term charts. And that's basically where we are. So let's go look at the actual charts and see what we got. So starting with the S&Ps. Okay, so last night, remember we had a test into the support zone. Lighter volume, slightly lighter volume. Into this area on the August 15th bar as well. And it was trying to test into those, hammer reversal, looked like it wanted to trade higher. This morning was a gap down, got a spike in the first 5 minutes and then gave it up all day. Went down pretty hard, got into that August 15th bar and unfortunately closed into it, which is a negative. Had less volume though. Volume over here 34.2, volume here 32.7. Also got under the September 30th bar. Had a lighter volume than that bar as well, slightly lighter volume. That was a successful test of this bar. The mixed signal is that even though you tested into the August 15th bar with lighter volume, you closed into it. And so that's a negative. Your two support zones gone, right? They're going to have to redraw lower now. I'm guessing that one of them is going to be down in this 1660 area, 1657. This is an ABCD down if it actually continues. That ABCD structure actually was from the high, and we should probably do the number on it, 1729, 1730 roughly, to 1691, so that's 39 points, so let's just call it 40 so we can make the numbers easier. That takes you to 1763, add a penny back, 1764. We're still in an ABCD down. So 1064 takes you into the bottom of this bar, basically. 1658 there. So you get down into the bottom of this bar if it wants to complete. And remember, we have in most of the sectors and even some of the indexes, we still have ABCD structures up that never finished and down that are still in progress as well. Let's go to the Dow Jones. So if we look at the Dow Jones, it's actually worse. This one just keeps barreling down. Now this one probably has finished the ABCD structure. 15,709. That's about 300 and... do it again. 709 to 253. That's about 450 points all into this one. It gets you about to 14.9 or so. It's almost completed. Got down to 14,947. So Dow Jones Industrials has just about finished off the ABCD structure on the way down. And remember, on the way up, it didn't even have one. So breaks what little support there was. Again, that support will redraw right here on this bar, which is 14,939. And we almost hit that today, and it looks to me like you're going to go into that bar tomorrow. So it's just, the Dow Jones has been a mess, and ever since they restructured it, it's been straight down. They ran it up into the restructure. If you remember, they were arbitrageuring it, and so the arbitrage was to buy it, and now that it's done, it's to sell it, and they've been selling it ever since then. I'm not putting a lot of weight on the Dow right now, but it is the weaker index, so it's interesting to watch it for the tell, because when it turns, you know that you actually have a turn taking place. Here's the NDX coming back in. Now, remember, ABCD structures on the way up didn't finish. This one doesn't have one on the way down. You actually broke out. You were doing a retest regen on that high, and today you got underneath it, so you failed on the regenerate higher. That's a negative as well. It says it could take it lower, and volume's actually expanded. Yeah, it looks to me like it's going to come back into the lower end of this range still. Yeah, it's just hard to read. You do have negativity here though, because you were unable to hold the low of the high, and the volume was heavier on both that and the breakout bar. Let's see, IXIC. I think the NASDAQ looks about the same. Not quite the same. Now this one actually held. The volume was lighter, 3774.11. Yeah, just held inside of it. So the NASDAQ, the broader NASDAQ is actually holding. So that's a positive. That's the one positive we've seen so far. Let's see about the Russell. Now the Russell, it didn't have a breakout. The last breakout was down here, and it's just trying to get back in and retest it. Never has. Or did it here? 1061.79. Yeah, it did. So it actually has tested into it once before. So at this point, it's just a support zone. And I would go off of this bar on the 918 bar as my bar. You wouldn't want to see it trade under the 918 bar, which is basically the bottom of support. So potentially more down here. Range breaks out of that range, comes right back into it, can trade to the bottom of it. The bottom of it is this 918 bar. That low is 1058, and 1058 gets you to the bottom, or it gets you into the swing point high, right, one more time, and that would be another test of that support zone. So that's the way the indexes themselves shape up. I don't know that we're going to find out much more, but I'm going to quickly look at the sectors and see if the sectors tell us anything. So let's start with the transports and work our way back. And what I was talking about here, I think I talked about it last night, was that, and I'm going to pull this over and put it on a weekly, you've got a lot of swing point lows that have printed in a number of these sectors, right, that are down here. If you go breaking those, that's a problem. The one that's about to print is up here. If you can get about 2 more bars on this particular one, 1 bar on some of them. That low, and I'm going to go back now to the weekly. That actually, let's look at the 1156 to go back to the weekly. 1156 is going to be these lows down here. So you can see you're still a ways away from trying to break back down. And if you even just look at this as a large range trade, that would just take you back to the end of August lows, right? But if that takes another couple weeks to get there, if it in fact is going there, then that actually sets up breaks on multiple swing points, and that will be a bigger deal. So at this point, you know, it's just something you have to put on your radar and say, okay, you know, the setup could be coming. It's not here yet, but it could be coming, and we need to be aware of that. But, you know, we got a long time for that. Well, not a long time. We have time before that actually actualizes, if in fact it's going to. So looking at it on the daily, this doesn't tell me anything. It's just range trading, and I'm guessing most of these are going to be the same. Semiconductors have been the strongest one. Let's see what they're doing. Yeah, they can't hardly take this one back down. It came into a swing point high, you know, did a successful retest, regen. That was 1.5, hit it with 1.6. So it actually regenerated higher, but it had higher volume on that retest. That tells me it could be retested again, especially in a weaker market. So that low is a low I'd be watching. 39.37 on 9:30. XLB. This one's just range trading too. They're all coming back. Remember we were talking about getting into these bars, the big bars? They haven't even gotten up there yet to test that side of it. What they're doing is testing the bottom side, which in many cases is retesting regens or into support. This one came into support, hit it with volume. I suspect it's going to come back there again tomorrow and try again. XLE, also volume expanding a little bit. That, you know, other than the fact that you can't lift, it's not really telling me anything. XLF. So the financials, okay, they trade into lower lows. This has an ABCD structure down as well. Trades into lower lows and volume expands again. And that doesn't look good. So the financials still don't look good. Now the financials will report next week. So the way this is set up at this point, if I pull it over and look at the weekly, on the weekly you're not going to print a swing point low here if you get under this, right? You would still have one way back at the 1858. So what you really have is you have a large range trade still playing out. If you go into earnings and you're at the bottom of the range, you have a decent chance of seeing a buy the news type event. So, you know, again, you're just looking at what's coming and how this is playing out. And earnings, I don't think earnings are going to be horrible. As a matter of fact, I think they'll probably be bought. Oh, now look at the XLI. This one actually tells us something. So the XLI, if you remember, it was back at a retest regen and trying to hold. It backs into that retest, 46.02 down to 45.65. It gets to 45.67, almost to the low, and volume expands. That's going to come right back in, try to retest it again tomorrow. What you really would like to see is for this to get under it, back over it, lighter volume, and hold. If it doesn't, right, then you're going to start working on the weekly, and you're going to try to get back in to support zones. And in this case, the retest has already taken place, so the support zone is all that's there. And the volume's okay on this bar. It just looks like me it would work lower. So this one you want to see, if you're bullish, you want to see it hold. If you're bearish, it's starting to give you what you want, and that is you're getting an ABCD structure down that, actually that one probably completed, 48, 46 and a half, that's $1.50, that's 45.75. Yeah, that one completed today on volume. So So a retest tomorrow that holds, you kind of got your ABCD down out of the way, and you could get a bounce off of it. XLK, yeah, I mean, these charts are just messy at this point. I would look more at the weeklies. You know, here you are doing, you know, just sideways action back into a retest regen. And, you know, these can trade back to the bottoms and still be fine on this time frame. 31.41, we're trading at 32.05. XLP, XLP has been selling off, still selling off. Volume expanded a little bit today on the daily. You're coming after this low. This is just a big range trade and going towards the bottom end of the range. XLU is the largest sector loser today. Volume didn't expand on the daily, and this one just can't get going. It looks to trade down towards this low. So I don't see much there. XLV, that's the one we looked at earlier. We'll look at it here on the weekly. Okay, so it did a successful retest, regenerated higher, now it's coming back in. This one could come all the way into support, 49.13. And that would be the place to look at it if it comes back that far. Did leave a little volume on the top, but it wasn't a breakout. The other thing, if you look at the daily, actually the volume was nice here on the daily. So, you know, of the sectors, this one doesn't look bad. XLY, just range trading there, and on the weekly still looks pretty good. So, you know, I just, you know, I always, I don't want to sugarcoat this, but you have to fall back and look at your weeklies at this point and say, okay, you know, in the bigger scheme of things, it really isn't much to worry about yet. Could it become? Yeah, sure it could. It always can. But you just have to give this thing some room. Let it move around. You know, don't be pressing trades. There's no reason to try to press trades here right now. It's just not, there's no good setups yet. And you got a mixed market that's confusing to me, probably confusing to you. I would hope it will clean itself up here in a while and give us something better. But right now, you know, this thing can flop around. It's all news driven. And the news can cause, you know, I was remarking in the room today that this reminds me of options days. I don't trade options days, day trades, because you get gyrations out of nowhere and you really can't make good reads on it in intraday. And so I won't trade them hardly, not day trade them. And today felt that way in the market. If you look inside the market today, if I pop up a chart and I'll just put up the SPX, yeah, it's cleaner. I'll put up the SPX and put it on one day. You can just see the gyrations. You know, you get big, like this spike. I think this was, you know, this was the Capitol. There was a shooting on the Capitol today out of nowhere, right? You get a big spike down, right back up. You're driving down here and it looks like you're never going to lift. You didn't really test the low. I'll put it on 5 minutes, cleaner to look at. You didn't really test your low, and if you looked at the volumes were, you know, decent down here, and then you just take right off the other way, right? Because Bonner starts making comments. It's very hard to trade news flow because news flow can come from anywhere at any time, and the technicals aren't going to give you good reads on that. And so it's very hard to trade this stuff intraday, and right now it's even hard to trade it on a weekly basis. I mean a daily basis. So you just have to let it go for now and then come back. Let's look at the Ox markets right quick. I want to look at the dollar. Okay, so volume expanded a little bit today at the lows, and it closed lower again. Still no sign of a turn here, and on the weekly it's still testing, so tomorrow's going to be a big day for the dollar. Gold came back today. Let's see what kind of volumes they gave it. Not much. So it actually held in here pretty good today, didn't it? I thought it was down on the day. It actually closed higher. 127, yeah, slightly higher. So not bad, but it still looks shaky to me. It's probably coming back. SLV. Yeah, that looks the same way. And the bonds. Where's the bonds? Let me look at the bonds. Yeah, they can't lift. So remember, yesterday they went in, they fell. Today they go back up, they fell again. This thing's going to come lower, so the rates are going to go up. All right, let me quickly look at a couple things that you have. Tesla in the next few days and weeks, thinking going long in this retrace. Well, Tesla had two events that hurt them. One was the fire that actually got videoed and put on the internet, and that certainly wasn't good PR for them. So there was one of their cars caught on fire, and then they had some valuation downgrades, which are hurting them as well. All right, so let's look at it on the daily, and then we'll look at the weekly. So it's coming into this big bar. That bar had 24 mil. Top of it's 173 down to 160. You're at 172, so you're into it. You're doing 22 into 24 so far on a daily. Okay, and you're into the bar. So at this point, I wouldn't buy. Right, you're back into your breakout bar. You're doing a swing point. You're doing a test of this retest regen. Now, the thing that will probably happen here is you'll get a bounce out of here. The low of this is 166.40, which is almost to the bottom of this big bar. So I wouldn't be surprised. Now this is going to gyrate a lot, right? Because the beta is very high. But I wouldn't be surprised to see it trade under or down to the bottom of the swing point high, maybe even the bottom of this, and flip around all in the same day and hold. But I suspect your volumes are going to be heavy, and it's just going to be a bounce before you come back down again. That's the way I would read this. The other piece of this is the valuations are, they're really off the charts right now. So this is a momentum stock. And if this market does take a bigger spill, these stocks are going to get hit hard, right? Because there's so much money in them and probably leverage in them that when those folks have to unwind them, they're going to be huge unwinds. So I'd be careful. If you're going to get into something, you gotta take a stretch buy on it, and I would look at the bottom of this bar, 160.25, somewhere down in there, because you got the top of this one at 158, 160.25. You don't have to risk but $4 or $5 there, right? And you got a good shot. Let's look at the weekly. So the big bars here is, the last one is up here at 158. That is this bar. So that's where I'd look at, right there, 158. Right into that area is where you'd want to get it. XLU, again, both daily and weekly, and why you believe it will trade lower. Yeah, let me come back to that one. Let me do GDX real quick since I have it here. And then I'll do the XLV. Okay, so GDX, gold miners, this is the big cap guys. Okay, so the top of this 2466, you're into the bar. You're doing 140 into 230, so you don't have the volume. So that's a good sign. The swing point low 2389, you're 2427. Oh, I'm sorry, I'm over on the weekly and you can't see what I'm looking at. I'm sorry. So I'm looking at the weekly here. So the 2466 and this low is 2389. You're doing less volume into them on the weekly. Now, if gold has a history of moving big on Friday, so what I would be looking for here is to stay over this swing point high, maybe even test it, but test it on less volume and close above this 2466 area. So that's a big chore. So, it would be nice to test it. It doesn't have to. It's close enough. What you want to see is it close over this bar. I wouldn't buy it unless it did. 2466. Where does that show over here? 2466 is into this area. So this low. So actually where this support zone is. And that's, I would want it somewhere up in this area to buy it. So I wouldn't try to buy the retrace here. I'd make it prove it can turn before I try to buy it now. Because you can actually go down and test those lows again. Look at it on the weekly. There's volume down there still, right? It hasn't been tested. So you can go all the way back down to the bottom. So I just wouldn't press a trade here until it showed me some strength. And let's go back and do the XLV, the question there. Daily and the weekly. Okay, so I like the way it looked on the daily here. The problem is you press back down today, you had some decent volume. Yes, you closed back over this. Yeah, that's all good. And if I look at it on the, so that part of it, that part of the equation is good, right? If I look at it on the weekly, the move up, right, when we pressed up here, you had okay volume, but you didn't have great volume, right? I mean, if you compare back into these volume days, right, you had okay volume up here. Now you come down, and this week you're expanding on volume. Now I know what you're going to say is you're going to say, oh, well, that's because of this big day up. Well, yeah, that's true, but if this thing closes into the swing point high again, right, closes back down into here, which I suspect we're going to have a tough day tomorrow. If you're back into the high, that's 50.40. We're at 50.66. That would tell me we're going to test lower again. So it's not a bad chart. It's a chart I would, if I'm looking for an ETF to buy, this is one I'd be looking at. But I'm not ready to buy it yet. And it just looks to me, it tested it, didn't test it as much volume, came into the support zone. It just looks to me like it's going to come back in there and test again. And that's just me reading the chart outside of probably the normal stuff here. And part of that is just the overall market. The overall market wants to try to trade lower again tomorrow. I expect this is going to trade lower with it. So, I'm way over here on time. I can't say this enough. When you don't get the reads that you expect, and the market doesn't do what you expect, you really have to back up. You got to tighten up and let the market play out. And so if you're looking at me, I'm going to buy good stocks on the way down because the long-term trends are up. But I'm going to buy slow and deliberate. And I'm going to try to stay out of trouble and not do anything short-term. And that's the way I would view the way this market should be traded at this point. It will give us a better trade here at some later date. Right now it's not. And you just can't press that when it's not. All right, I'm going to leave it at that. I got to go, folks. I will see you this coming weekend, right? Sunday, the weekly show. We'll do the weekly. We'll see how the market trades. You don't have any government data coming out tomorrow, so the jobs numbers aren't going to be there. I think tomorrow is going to be all news-driven, so you're going to see spiky markets. Take care, and until next time, have a great one. Thanks, folks. Good night.